Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the active June 27, 2017, about 3:35 p.m. Central Daylight Time. As you can see, the stock market got hit. Gold caught a bid off this action, as did the silver. Silver was able to drop down one time, get near those lows, and come back up, closing about 8 cents higher on the day. The dollar took a beating. Now, this is central banker day. Mario Draghi has switched, or is alluding to switching his position by saying that as long as the European economy, the Eurozone, continues to grow, that they will be considering the tapering back of the stimulus. I'm giving you the words, not his own, but that's basically what he said. That put up the euro 161 points, took the dollar down. All of the foreign currencies in Europe gained against the dollar. The yen down. I believe the New Zealand currency was down. So you're getting different markets that are sinking a bit. As I'm talking to you, the API numbers have come out, and from seeing them, it doesn't appear that we've gotten much of a draw. You have lost ground, about 70 points from the high in the crude. We'll see what it does going into the close. Another thing that helped some of the metals and help these markets is that cyber attack. I think they're calling it Golden Eye now, if I'm correct. And it's like the WannaCry that we recently had, and that's putting up the markets because nobody knows what it means. What always amazes me is there's a patch for it on Microsoft. People aren't putting on the patch or can't put it on, I don't know which, and they're getting themselves into trouble. Big companies, I'm surprised at that. In the gold chart for the weekly action, you're down $7 at $12.49. That's on the weekly chart. As we come to the daily chart, first I'm going to look at the closes. We've gone from $12.43.50 up to $12.56.40. Fell back yesterday, and today, at this point, we're up $2.40 at $12.48.80. So the market doesn't have an even path, if you will. It's got a lower low and a higher close. I will not call that a trend. When we come and we look at the daily bar chart, well, you've got some action here that slipped down. Now, I know some of you are going to say, why am I covering that? Because it doesn't matter. This is what you should be focusing on, because this action tells you where the swing lines are right here. And all I care about is you got a higher high and a lower low. No trend at all. I then look to see where the market's at. What was supposed to be support, the 100-day average in the green, I call it the 100-day MAC, on the rally is becoming the resistance right now. At the same time, the 18-day average is slipping down. So we have two bands of resistance in the market. 1253.50, the 100-day average, 1264.80, the 18. The traction in the market seems to be coming in from the lower Bollinger Bands, but they're not turning up, which is still problematic. It means that the, if you will, the swings in the market are just wide enough to keep them going outside in terms of the math that they're doing. And in terms of market momentum, well, today you had a chance to lose the embedded reading. But if you take a look, you didn't do that. As long as both numbers are staying what? As long as both numbers are staying under 20 that make up the slow stochastic, the market is said to be locked into a bear phase. And rallies back up to key moving averages are probably getting sold by the pros. At least that's what I teach. When we come to the ETF of gold on the daily bar now, we look at this market and we can see the 100-day average is what the market's hanging at. The pattern of the market is one of higher lows and higher highs, which means the trend is up, but you're under the 18-day average of closes. That means the bias is down. And then when I come over here to the slow stochastics, they are all embedded too. So this market is not left its bear phase. That's the way to look at it. When we come over to GDX, it was looking good until late in the day. And as the day's gone on, you now are back in a bear trend. You have lower highs, lower lows. Where was the battleground? Just what I try to teach you here. That red line, the 18-day average, that line in the sand, as I like to call it. So often, markets will go to that number and try to figure out what next. And yes, they eventually break away from the number in different ways. But over the years, and I'm not talking 5 or 10 or 2 decades or 3, I learned to work with this average before I could even do it on a computer. And I learned the importance of not only this one, but there's others. There's 20 days, there's 50-day moving averages. There's a whole slew of them. I've even been part of services that said, well, you know, you can take each moving average and you can take that average and, if you will, make it fit into the grains. Which one's better than the 18? Maybe another one. What I learned over time is it's not worth the effort. I didn't see a material difference. So for me, that's how I approach it. But I'll call this market now in its bear trend. The gold-silver ratio has got a correction going on. Remember, the lower the number now goes, we're at 74, 73, you need less silver to buy an ounce of gold. So silver's gotten stronger than gold. It's down almost 1 ounce from just 3 days ago. As we go to the silver chart, you can see how the market's doing, but it's still in a downtrend, lower highs, lower lows. However, it lost its embedded reading. Now, this was Monday's action. This is today. It can only gain it back with a big break tomorrow in the market. Doesn't get that, the odds favor that price and the 18-day average are going to make a run at each other. When I go to the copper market, as I've said, this market is strong. Momentum's pointing up, but it's overbought. It today made it back to the upper Bollinger Band and again stopped there, but the trend is clear. Higher lows, higher highs, bullish. Over the 18-day average, bullish. It's fighting to stay over the 100-day average of closes, which on these first tests, typically it doesn't happen. Typically you get thrown back. The word is typically. It doesn't mean it can't happen. But you see it failed there, you see that it failed just here, and now it's fighting back and forth against it here. That is not a go short signal, just where some resistance is. In the platinum, you have a higher high and lower low. No trend, but you certainly have downside bias, but you are oversold in this market. That was, by the way, did I say, that is platinum. This is palladium. I've got the wrong words. I'm so sorry. This is September palladium. I don't know how that even showed up there. I was working on these charts this morning. I thought I fixed them all. Higher high, lower low. On the 18-day average, nothing new there. September dollar index, higher high, now a lower low. So in the brief span of just over 5-6 business days, you've gone from the upper Bollinger Band down to the lower one. This is so typical of markets that look for direction. They just whip the traders around. This market is not trending. I don't know how to make that any clearer. Yes, it has downside momentum. Yes, it's got downside bias, but it has a pattern of a higher high and a lower low. Let it push out the lower Bollinger Band and I'll have a whole different opinion. I don't know if that'll happen. So when I'm looking at all this going on, I'm just saying to myself, okay, we have an interesting day. It doesn't mean you're going anywhere, falling apart. Doesn't mean you're going to soar to the moon either in a lot of commodities. It's summertime thinking. And I am going to go on vacation. So before I start to tell you this, I want you to know I will not be here Thursday or Friday. Bye-bye. Going up north fishing in Wisconsin. I love to go for pike and muskie. And, you know, I've never caught a muskie, but I've done a lot of the pike. And I've been very fortunate with them. I mean, big boys. So now what I want to do is talk about what we have in our course, because I'm going to be taking away the discount for it. This course started out years ago. I've been teaching how to chart using different techniques for probably the better part of 35 years or more. And I redo my course with new thoughts, new ideas, and I do them every few years, 3 years, 5 years, whatever that comes in. I just did this in December, and I did it because I wanted it to come out for Christmas, and it sold like hotcakes. Normally, I price this in the couple of $100 range. It came out at $69.95 in December because I found a way with my IT staff where we could do it all online, no DVDs, none of the old parts that we had to, special code keys, and I was able to save money for myself, and instead of keeping it, I passed it on to people. So instead of the course $179.95, I priced it at $69.95, and then I started moving the price up. I'm now at $99.95. You're going to get it at a discount if you're interested. And I'm going to raise the price again. So at $99.95, you get approximately 6 hours of videos that explain 5 of my indicators, the 5 that make up the core of what I like to base a trade on. You got your moving averages, you got your window envelopes, you got Bollinger Bands, you've got slow stochastics, you've got everything you need in there to work with them. There are 5 of them, the swing line, of course. So as I put it all together, I then do a PowerPoint on one short video, and then on a longer video, I actually open up a chart, and I love to close the name of the chart. I know that if I keep the name of the chart up, you're going to say, oh, I'm bullish. It could be oil. I'm always bullish on oil, or gold, whatever it is. I take that off because I want you to just see the chart. And then we start looking at it, and then I eventually bring it to you. But here's what I do. That's nice for teaching the technique back when I recorded the course in December. It's not even 6 months at the end of it. What else? I then, every morning, typically Mondays through Fridays when I'm not on vacation, I record a video. It's about 15 minutes long, and I review every chart, 40 of them, and I show you and I reinforce what you're learning. So I'll show you what a swing line's doing, what the moving average, and we'll pick out trades that I think make some sense. I'll tell you what I think the pros are doing. I write about it, and that's what the video looks like in the morning. So now I set you up with a cup of coffee, as I like to call it, and away you go. The course, $99.95. Use the word Ira 20 when you go to buy it in the coupon area. You're going to get it for $79.95. You can call my staff. It's the easiest way to get it, 866-973-2077. You can also go to our website under the word education. That's www.iraepstein.com. You'll see education, explains everything. There's a video about the course, how it all works. You can click up here at any point. If you're watching me on YouTube, click on that icon. You'll be taken right there. I'm Ira. Take advantage of it. Remember, I will not be here. I will be here on Wednesday, tomorrow, but I'm not going to be in the office Thursday, Friday, and I'm flipping a coin if I want to take off Monday in front of the 4th of July and actually make a little holiday of it for myself. You have a great day. I will talk to you all later today in our financial video.